China's latest trade figures are out and they paint a mixed picture of how the world's second biggest economy is faring. Exports rose 8.5% from last month. That's slightly more than Reuters polled economists had been expecting. Imports, on the other hand, fell almost 8% in April compared to a year before, a sign of weakening domestic demand despite the recent lifting of pandemic restrictions. The latest numbers leave China with a trade surplus of over $90 billion. We can talk now to Susanna Streeter. She's head of money and markets at Hargreaves Lansdown and is joining us from London. Susanna, exports are up, imports are down. Overall, is this good or bad news for China?
Well, it does indicate that pent-up demand that we saw after those pandemic restrictions were lifted finally has started to ease back, because there's certainly a slowdown in growth. However, those exports did come in slightly higher than expected. So, as you say, it is a bit of a mixed bag. But meanwhile, it does point to cautiousness as well in the domestic economy, because imports slowed. Now, we did already have imports drop back. Now, we did already have indications that this was likely to be the case, because, of course, with the expectation of perhaps more turbulence for the global economy ahead, it's little surprise perhaps that Chinese consumers and also companies as well, are a little bit more cautious. But certainly, as far as the export slowdown is concerned, we did also have indications that this was probably going to be the case, because we had pretty stagnant numbers coming in terms, and actually a slight contraction in terms of manufacturing activity in March, because of course there are repercussions of the slowdown in the United States and in Europe over the amount of goods they're actually ordering from China.
OK, and Susanna, I really want to look more closely at domestic demand. You touched on it already. There was a lot of euphoria after pandemic rules were lifted. Is this just a natural post-high lull now, or does it point to deeper structural problems in the economy?
Well, certainly there was going to be some kind of lull following that surge in demand, particularly with so many consumers able to go out and shop and eat, socialise once again. Certainly conditions have normalised to some extent, but there are still some lingering concerns about the Chinese economy, particularly for the real estate sector, and then as a knock-on effect, some of the financial sector as well, financial activity, because of the concerns that there could be emanating still from the fragility within the Chinese real estate sector. So certainly there is some pockets of weakness ahead, and I think there is a little bit more cautiousness creeping back in, with an eye on what's happening in the global economy as well.
Now, we're also expecting inflation data later in the week. So far, China has managed to avoid the kind of cost of living crisis we have seen in much of the rest of the world. Why is that?
Yes, certainly, as far as China is concerned, it really hasn't had to experience the same real cost of living headwinds that we've experienced elsewhere. I mean, partly because of the fact that, of course, those lockdowns continued for longer in China, also kind of more self-reliant in many ways in terms of commodities. And so really it's not had the same kind of pent-up demand lasting for so long. And in fact, it's more kind of deflation that could be a cause of concern in China, although it doesn't seem to be disturbing central bank policymakers right now.
All right. Susanna Streeter, thank you very much.